take your beer goggles off right now because there's all kinds of money that you could be making. There's also a lot of mistakes that you could be making right now if you're not riding SoFi and Robinhood in the ways that I'm about to discuss in this video. Now, Robinhood, man, it's up 10.9, basically 11% in just one day. We're making all sorts and all kinds of money on Robinhood, as well as SoFi. SoFi got a pretty big position here. So I want to go over some technical analysis. I want to give you a breakdown of SoFi stock right now. Now check it out. SoFi is currently at $28.50 per share. And in the last 1 month, the stock is pretty flat, to be honest, which actually makes it a great time to be selling options on SoFi and generating income because this is called stability. But let me tell you, SoFi is about to rocket higher. This thing's about to go to the next level. I personally like SoFi a lot because they have a really strong financial matrix. Basically, once they get you into their financial matrix, it's like child support. You're not going anywhere. They have figured out, they have engineered a way to basically get you in the door, start you with one product. Maybe it's a student loan, maybe it's a credit card. And from there, they offer personalized cross-selling methods to you. Basically, it's investing, it's home loans, it's the whole wheelhouse. They give you a lot of personalization so they can upgrade you, cross-sell you, and upsell you on more products. This is why SoFi is actually making a lot of money right now. They have something called a flywheel effect. They get you in, and then they squeeze out a lot of LTV from you. LTV being lifetime value. Now, currently, the stock is trading for $34 billion. This number has not been really growing a lot, but as we get more innovation coming from SoFi, as we have more earnings quarters, the next 6 months, in the next 2 earnings quarters, I really think the stock is going to increase a lot, and people that are not in the stock are going to really regret it. Because SoFi has figured out their cost of acquisition, they have figured out upselling and cross-selling. Their cost of acquisition is extremely, I'm telling you, very low, because they have figured out how to use sponsorships in their advantage, such as SoFi Stadium. They have a lot of SEO-heavy content marketing on Google, as well as other websites. They are getting traffic and marketing for a very cheap cost. All of these marketing and attention sources for SoFi is leading to lower CAC, cost of acquisition. And this cost of acquisition to acquire new customers is exactly what they need to really compete with other banks. Not that they really have that much competition. They're doing it really well, but also just compete with even companies like Robinhood. We're going to be talking about Robinhood very soon. But for me, SoFi is great because of their cross-selling and upselling engine. Their data personalization, right? So they have a lot of back-end data. They're using data, they're using AI to really push more products. They're pushing more products. There's a lot of adoption going on. Like just check out their earnings quarter, okay? Let me go over the numbers real quick so you have an idea. Net revenues went up, right, 38% year over year to about $961 million. So they're about to hit the $1 billion threshold. Adjusted net revenue was about $950 million. Fee-based revenue, $408 million, which is a 50% year over year increase, okay? Now, we've been talking about cost acquisition and all customers. Well, what is that number? It's 905,000 new members in Q3. That's crazy. That's stupid. That's insane. They have brought their total memberships to about 12.6 million, okay? Now, what's even more important to me is, yes, that's great, but what's even more important is new products added, 1.4 million. So total products are now 18.6 million. They have a total of 18.6 million products that they have already kind of delivered, and this is only growing 36% year over year. So that's very similar actually to new members added, which is interesting. New members added is 35% increase year over year, whereas new members is 35%, new products is 36%. These two numbers are so close to each other, which means to me there's a direct correlation. New members, more products sold. This is the most clear relationship that I have literally seen. The most clear relationship. And that's why net interest income is also growing 36% year over year. It's very similar at 585 million in net interest money. So if you look at the facts, the numbers are insane. And a lot of it is from personalization, cost of acquisition, upselling and cross-selling. This is why, for me, SoFi is going to be a company that's going to be a $50 stock at some point, a $50 billion market cap and a $50 stock. So if you look at which segment contributes the most profit margin and which has the highest growth potential, for me, the lending arm delivers the highest profit margin. So when I've done my research, it's about 70 to 80% of that contributes to profit, but it is, pretty sensitive to rates. So that's kind of like an important kind of issue that they're going to have to tackle. But I will say that they have a lot of diversification right now. So because they have diversification, they're not just lending. They have a lot of other scalable parts of their business, especially their tech platform, which is lower margin, but very, very scalable. So the current acquisition is estimated to be about $40 to $60 per new user. A lot of cross-selling multiple products can push LTV to about 1,000, maybe a little bit more than 1,000. So when I'm looking at the payback period of what they get for the marketing, it's 12 to 18 months, which is absolutely insane. Whatever money they spend, they basically make back within 1 to 1.5 years. So if SoFi keeps layering new features like option trading, by the way, they released options level 1, which is going to be very profitable because they're going to get a lot of customers in for the very long term. Once you have level 1 options, you got level 2, level 3 options, and that's a lot of fee-based revenue. So we already have a lot of fee-based revenue for SoFi. That number is only going to grow. Now, before we get into Robinhood, I gave you guys a trade 2 weeks ago. You probably forgot about it, but it has actually printed money because over 2 weeks, SoFi has not really done much. Right now, I think we're going to stabilize at these price levels for the next 2 more weeks, 3 more weeks. So the trade that I made, I need you to really learn from, okay? From 2 weeks ago, I want you to watch this 3-minute clip because the trade there, I'm going to talk about it after you watch this clip because it's a trade that you can make right now and still take advantage of to make more money. But let's talk about the sell put. Now, where would I personally sell puts? What level? Well, given that SoFi has pulled back from like $31.50, not even that much of a pullback to be honest, but now it's sitting at a really interesting entry point again because it has had a small bounce despite problems in the market and has had a nice support, a nice bounce right on its moving average. So technically speaking, amazing. Fundamentally, I love the stock as well for the reasons that I mentioned, as well as their strong cash flow. So to me, this is perfect entry in my opinion. This is looking very, very strong. So I want to come in right here at the 27. I'm going to show you kind of how much money you can really collect here. I'm going to go to sell put. I like monthly options, just keeping it really simple. In my community, what I do Mondays and Wednesdays, I handhold and show the trades that I'm making to produce income to scale my portfolio. And this is a trade that I'm going to be executing immediately as soon as the market really opens up. Okay, so what I'm looking at is this 27 strike. Okay, I'm going to expand this right here. You can see the delta is 37. And what delta is saying is there's a 37% chance that SoFi will go down to $27 per share. There's a 37% chance, okay? The implied volatility is 71, which is very high. This is a high implied volatility stock, which is the best of both worlds because it's a high quality stock that also has high implied volatility, okay? So if I were to sell a put option, to me, the reason I would sell a put option and why I love selling put options, and I've been teaching this for 6 years now, is because a put option helps an investor acquire the stock for cheaper than the current value of the stock, right? So SoFi is sitting at $28 per share. If you sell the 27 strike price, you are committed to buying at 27, which is a good thing, right? Because if the stock's at 28.40 and you're committed to buying it at 27, that's good because you're acquiring the stock for cheaper and you're getting paid to wait. You're literally collecting premium to wait to buy the stock at 27. This is why this is such a powerful option strategy that I utilize all the time to scale my portfolio, to help my students scale. I use this strategy. It is literally the best strategy for getting a discount on a stock, for safely trading, right? There's always risks in all trading and the market can always crash. But if you look at a high quality stock, what's the best way to get into it? What's the best entry? It's hard to say, right? Because you can't predict the market. But by selling a put option, you get a built-in discount. You get to basically purchase the stock for cheaper and you get paid for it. So here the premium is going to be $166. Now this percentage return is probably right around 7%, right? Give or take. I'm just kind of ballparking it. But you get paid 7% in about 30 days, right? So in about a month. So that return, an annualized basis, is absolutely massive. It's stupid amounts of money. It's bicep over tricep money. That is exactly what I am looking for when I'm looking for the multiple facets and factors I'm looking for in my scorecard, high quality company, good technicals, not at a 52-week high, has had a decent pullback, right? High implied volatility, high volume. So the volume here is really good. 400 contracts have been traded, right? So these are multiple factors that I'm looking for. Now, the bid-ask spread isn't as tight as I like, but the market isn't open yet as I'm making this video. So for that reason, it's okay that this might change. So this is the first trade where I would enter into SoFi stock and just either add to the position that you already have, like I'm gonna do, or start a new position. Selling a put is the perfect way to start a new position because it's a strong entry. It's a cheaper entry, right? So you get to have an entry here. Now, all right, so as you saw in that clip, I literally flawlessly predicted that based on the Bollinger Band, SoFi's in a pretty tight range. It's not really going to be going anywhere. So I believe right now for December 19th expiration, you can still sell $26, $27 puts for SoFi for like literally flawless entry. Get into the stock. If it pulls down, great, congratulations. You get to get SoFi for a little bit of a discount through selling puts. Now, let's move over into Robinhood stock. On November 26th, right, and we're going to edit this video and get it out for you on the 27th, but Robinhood ended up actually announcing, it was just moments ago, man, this is some shocking stuff, man. It actually changed my mind on the stock even more. Like, look at where the stock is right now. Hood has went up 11%. Why? Well, a lot of it has to do with some new partnerships. Robinhood announced a major expansion. They're launching a new futures and derivatives exchange via a joint venture with Susquehanna International Group. Funny enough, I got a job offer from Susquehanna International Group, but this was about 8 years ago. They gave me a job. The salary was too low, so I ended up not taking the job, and I already had a lot of option trading experience, actually. So it was a very similar role to what I was doing at a different job that I had. So I ended up declining Susquehanna International Group, even though they are very close to where I used to live and where my parents live in Philadelphia. So they're in Ballackinwood, Pennsylvania. Right around there. Very, very close to where I live, and I ended up rejecting working for them, but that's not, it was just interesting, but that's not the point. The point is that Robinhood has a relationship now with Susquehanna International Group, and they acquire 90% of a derivatives clearing business. That was kind of formerly MIXDX, power contracts on events, futures, and a lot more. So this expansion I am super excited about. I think Robinhood is going to literally make bicep over tricep money on this. They're going to freaking kill it here, okay? They're going to destroy it. So I'm very excited for Robinhood to make a lot of money. Now, the prediction markets derivatives exchange gives Robinhood a new high leverage engine for growth. If it catches on, man, oh, we're gonna print all kinds of money, all sorts and all kinds. All right, I'm telling you, I'm so pumped up because there's going to be a lot of people making tons of money. My community is going to get richer. Students that are trading options on Robinhood and SoFi, they're going to see me trade this thing tomorrow live. Man, we're going to be printing. We're going to boom, 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 boom. We're going to kill it. Now, look, earlier in November, Robinhood delivered, honestly, a blowout quarter. They killed it. They crushed it. It was crazy. 61 cents, which was a lot higher than I was expecting. And it was actually a lot stronger than consensus. So that's another reason why the numbers, the momentum, it's only getting started, man. This thing's only getting started. I think Robinhood is going to crush the dinosaurs, man. You look at those companies, the Charles Schwabs and the Fidelity, man. Robinhood's going to kill it. I'm telling you. They're going to kill it. Now, obviously, I'm not a financial advisor or anything like that. So there's competition. Of course, the stock can kind of stay sideways after this big move because now we've gotten a lot of big moves here. So are you late on the stock? I don't think so. I think there's still some more room to run, but obviously, you know, when the stock's up 11%, if you have it, great. But if you don't, you're going to have to probably sell puts just like I did on SoFi. If you subscribe to this video, if we get 250 new subscribers, I'll make a video on selling puts on SoFi. How about that? Robinhood, I'll make a video on selling puts on Hood. How about that? So how does Robinhood actually make money? Well, Robinhood has evolved a lot from free trading. Now its business runs in 3 major engines, and it has shifted very meaningfully into these 3 engines One of them being net interest income, so similar to SoFi, but Robinhood makes 45 to 50%. So this comes from yield spreads on customer cash, margin loans, securities lending, and interest on assets. So all the money that you're not using on Robinhood, they're making money on you, man. They're making money on you. They're finding ways to make money. Nothing's free. Even your cash doing nothing, someone else is making money with the cash that you're not doing nothing with. Interesting, right? Now, 30 to 35% of the money that they're making is from trading transaction revenue. So options, PFOF, which is pay for order flow. So again, whenever you're making trades, they're selling your order flow. They're selling your order flow. So traders and hedge funds are taking advantage of your order flow. And maybe it's a couple pennies here and there, but when you trade a million contracts in a day cumulatively with a penny, well, that's what, a million contracts. That's 100. That's like $10,000. So it's not crazy, but they're probably doing a lot more than a million. It's probably say it's 100 million. And when they make like a penny or a really small amount, it could still be $1 million a day. So Robinhood's really printing there with the pay for order flow. Crypto trading spreads, obviously, they're going to be not the best on Robinhood as well. So there's going to be some money that they're going to make there as well. And then last but not least is the subscription. So Robinhood Gold. It's not a lot of money, but they get you with the psychology, man. They really, really get you. The psychology is kind of get you paying something. And once you're paying, you're locked in. You're like, hey, I'm paying something monthly, so I might as well contribute here and add more money to my portfolio, which again goes back to net interest income and then more trading. So the more money you add, the more money they make. That's as simple as it is. So these are the three segments that are just killing it. So for me, the highest profit margin is still going to be net interest income. Okay, net interest income is Robinhood's most profitable engine. Very, very wide margin. Now, why? Well, it's because Robinhood holds 20 billion. It's actually probably more than that, 21, 22 billion in that range in customer cash balances, right? And sometimes I got $100,000 laying around. Sometimes I got some cash and I save the cash, for future trading session. I say, hey guys, we had our trading session on Monday. Wednesday, I'll see you. I got 100K cash to go. So Robinhood is holding on to 100,000 or more of my dollars. So yeah, it adds up. It adds up to $20+ billion. And they earn on that. They invest that money, right? So they pay users far less than what they earn. They can earn a lot more. So it's called like a spread, right? They're basically collecting money and arbitraging. Arbitraging is basically finding something somewhere that's cheaper and selling it somewhere else more expensive, right? Like oil, right? Like South America or Middle East, right? They have lots of oil, they get it for cheap, and then they sell it more expensive, to the West, for example, right? So just finding something that's cheap and selling it for more, right? In Vietnam, they make mangoes and they send that the mangoes over to America, and the Americans are willing to pay lots of money for nice mangoes, right? That's what arbitrage is, okay? So what else is Robinhood really adding in? Well, they're adding in margin loan interest, security lending revenue, and interest on Robinhood's own portfolio. So they have their own investments, right? So the most profitable segment is net interest income, but the fastest growing segment is actually subscription and recurring revenue. So Robinhood Gold, Robinhood credit card. I don't have a Robinhood credit card because I live overseas in Europe and I travel a lot in Europe. I'm going to be going to Dubai very soon. So I don't have the credit card, but if I was in America, I would have the credit card. So I would be a customer. I think it's cool to have your credit card and your brokerage the same. That's cool. Just one ecosystem. Again, like SoFi. Come in, you upsell, cross-sell. I would be upsold by Robinhood easy. I would be upsold easy. But I don't want to use their credit card at the moment. It doesn't make sense for me. What else do they have? They have premium data plus advanced tools. I'm really excited for that. And look, the most thing I'm excited about for Robinhood is just higher ARPU, which is average revenue per user. I think they can really increase that. It's definitely not as high as SoFi. SoFi has a lot higher, but Robinhood has more customers. So kind of like little catch-22 there where Robinhood can get more customers a little bit easier, but they are worth a little bit less than what SoFi is making from their customers. So I'm telling you, beware. Hood is going to take off, and beware about SoFi. I don't think it's going to take off yet, but if you're not generating income on SoFi, you are really missing out because there's a lot of premiums that you can be making on SoFi right now. The trade that I gave you, by the way, on SoFi was selling a put option. If you want to watch a free selling put option course, I'm going to add it right here. It is the best course I ever made, completely free on YouTube, so go ahead and check it out right now.